If a new corporate entity was created during the 1920 period, would that preclude the ability to receive any benefits? So my first concern with this question is if it's just a new corporate entity and it's not a new business, so it's just a legal entity change, then most likely you're going to have an aggregated situation where you basically you need to treat it as if it was one business. So that would be the first question. And then the second question is, well, if it really is a new business and you don't have an aggregation issue, the first piece you're going to want to do is the receipts testing. And so I put the link in there for where you want to go for the rules for receipts testing when you have partial years. It's IRS Notice 2021-20 question 27, give you the guidelines for how to modify the receipts testing when you don't have a full 2019. And then in addition to that, if it started after February of 20, the business actually started operations and was a business after February of 20, then you're going to want to look at IRS Notice 2021-49 on the recovery startup business rules. They're different. If a business can be qualified as a recovery startup business, they can qualify for the ERC and Q3 and Q4 under, as long as they meet that definition of recovery startup business, which is extrapolated in that notice, then they're just going to qualify for the quarter. And then in addition to that, you also want to consider the government, the rules with the nominal portion of the business, like that segment closure, are going to be impacted based on, you don't have a comparative period in 2019 for the safe harbor, like I discussed. But if you've got, basically, if you have the nominal impact happening where the business was subject to restrictions and you do have a comparative period of what normal operations would be, whether that's pre-pandemic or post-pandemic, I think you can make that argument that those government restrictions, you would have to follow all the same rules. It's just the comparative periods that you'd be looking at would be shorter. And you also want to make sure that those comparative periods really are comparative periods, that is the normal course of business and not just, the business was starting up and operations weren't started yet. So definitely a needle to thread there, something I would recommend you get professional tax advice on. But, potentially, yes, under the recovery startup business rules, gross receipts testing, or the government orders, you could potentially qualify under any one of those. It's just going to be a little, tougher and more nuanced of a question because you have a business that wasn't fully operational during 2019 as a comparative period.